Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January the 28th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. James, we've been talking about this big resistance level up here, and we were likely not going to break above. And so far, we've been holding. The significance of this level happens to be from the prior high to this low. It is a 618 retracement. And typically, if you fail at a 618 and start breaking down, that's a sign of continuation toward the downside in this example. And we've talked about topping out here and moving down here over the next multiple years. And let's drill in on this because this is an important level. Last week, when we were looking at our levels, we said the first thing we needed to do on the dollar index was break the trend line. That would start the process. We did that. Then we had this big support zone over here around 107.80, and we were testing this form of resistance, turn support, 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 support. And we said, once we start breaking below this level, that would kind of set the tone. We're going to start drifting toward our magic Fibbo line. Well, I think that's where we're headed. So even though we got a little bit of a pushback here to the next level of battle zone, form of resistance, turn resistance here back to support, and we're testing it as support currently from that 107.80 down to basically 107. So even though we popped up a little bit, I think we're headed this way. That was the plan. We close below this level. We're likely going to stair step our way down toward this magic Fibbo line. Amen? So it looks good. So Ian, are we going to get there, or are we going to go busting back up? Well, the only way I start thinking about us going any higher is you have to go from the high to the low, which is now down here. So if this isn't going to break down toward the EMA, then we need to see price start getting back above this 109 and change up here. Right there, that 1618, roughly right there, about 109.07. So we start breaking above that 109.07, 109.50 area, then sure, then we could say, okay, we are going to go a little higher. But this bounce looks a little anemic, and it looks like it wants to come down here, as opposed to start breaking in this area to set the tone. We go into 110.65, 111. So I don't think that's the case. Price should prove otherwise. So up and until it does, expect this to go down, expect the euro and the pound to grind higher while the dollar index grinds lower. Amen? So this is what we were looking for. We get a close below this area, finally breaking that support zone. It would set the tone, and typically what happens? You break support, you go to the next level. Form of resistance, support, resistance, support. So there's no reason, no surprise, actually, no surprise, I should say, that we stopped here to temporary bounce, but we still got this downtrending highs from this swing point up here to that swing point. So we got a couple of things we got to prove. If we are going to go breaking out, we got to break above the trend line, then break above the 618786, which I'll fix that. And I'll drag this into this area. And we could start doing that. Then Houston, we're probably going to go higher, but that's a big if. Break the trend line, go up here, break this low resistance zone to then all means right here, we're going to go to 110.60, 111. But based on this lower trending highs, this rally and failure, I think we're headed this direction. Now, what happens if we don't hold the magic Fibbo line? From the big move from the prior low to that current high, we don't hold the magic Fibbo line and we start breaking below this 103.90 area, then that really sets the tone. We're likely going much lower. Let me bring that back this direction. So that would set the tone. We're going down to 98, 97, probably onward and downward toward 94. So this is big right now. The long of it, we must break the trend line, must break above this 109.50. Then we could talk about 110.60, 111, maybe 112. But other than that, as long as we continue lower, we could come back here to bounce and still go higher. That's a possibility. But the writing seems to be on the wall. We're probably going to stair step our way lower, at least to retest the magic Fibbo line. Why is that important? Well, if you're trading the euro dollar, for example, we talked about this level and it's grinding right at this level. We did get a close above, just like the dollar index got the close below that level. And we're likely going to start grinding our way toward 106. So far, we made a high of 104.54. So, we did grind a bit here from this low down here, about 300 pips so far, and we're stair stepping our way higher. So as long as we hold and we're a little bit below this level again, but we did close above. Yesterday we pulled back to test it, and today we're testing. A lot of times you'll see this. You go breaking that downtrending lower high line right there, this big long green line. We broke it. Now we might come back to retest it to then bounce. But I do think the euro is more likely to go grinding up toward this 106 area, the magic Fibbo line, than it is to break down and make new lows. Amen? So this is just typical during a stair step. We kind of rally, we pull back, we rally, we consolidate, we rally, we pull back, consolidate, just part of the stair step. So the bias is, as we said last week, the dollar index could break that support line. The euro was likely going to break its resistance line. And sure enough, we got the close. So the likelihood this stair steps its way up toward here is higher probability than the likelihood we break down and start shooting for 101.50 or 101 or even near parity. Amen? So this is a massive support zone down here. From that low to that high, it's still a massive support zone. But I think the writing's on the wall that we're likely going up here at least. Maybe we hit this to come down. That's a possibility. But the likelihood we go up to this zone looks good. And the fact that we broke this level, the downtrending trend line right there, lower high trend line, that's a positive. Then we broke that big support resistance zone. That's a positive, even though we got a little bit of a pullback, but this is just typical. You rally up, you break it, you come back, retest. In this case, the downtrending trend line right there to then go up there. So the bias is we're going to stair step our way higher and likely not going to go much lower. I think this backside of the trend line, if we do go a little bit lower, would probably be the end, and then we pop up. When do we go bearish? From the low to this current high, which we did get a new high. That puts us right around that 103 area that we have been talking about. So if this rally fizzles and we come back and start breaking below this low, which would be a what? a break of the trend line and a break of 103, then the door is ajar, that 103, 102.50. If we start breaking that, then we're likely going to make some new lows. So be careful. I do think it's going to be a lot of chopping action, but I'm going to move my support zone to match the current price action. And now this green box represents if this pullback holds this line, we're still likely going there. If not, and we break this level, then we're going to go lower. Amen? So those of you that are in this euro bounce we talked about, I would be in a position of authority, and we're likely going to get a higher low, higher high. We're likely going up here as we had discussed, but so far so good. This typical, once you start breaking up, I mean, that was quite the move. Look at that huge green candle. A couple of days of consolidation, another big pop. There's no surprise after this big move, we need some sort of retracement, and we're basically getting it. We're coming back toward the downtrending trend line and this former battle zone, former support, turn resistance, resistance, support. So this is just typical price action. We're stair-stepping our way toward this magic fibbo. And if we can continue this journey and we start breaking above this 108 area up here, then the door is ajar. This 108.19, 109.90 is kind of a big gap. But once we start closing above this 108 area, then it sets the tone. We're going up towards 136, 113.60, and onward and upwards toward the next level, which is right off the chart up here. So with that in mind, the bias is more up than down, but this level should hold. If not, last line in the sand here, last defense is this 103, 102.50 area. As long as that holds, we're still good to go higher. Amen? It doesn't hold, we're going lower. 101.20, 100, back to parity basically, and you get the point. Got it? So in closing, my bias is we're going higher, and this back test is typical that we're likely going to see this grind higher as this back test finds support and goes up, and our dollar index starts to stair step its way toward the magic fibbo line. The euro is going to grind its way up towards the fibbo line, and then we'll reassess. Now, again, like I said, if we do get up here and we start breaking it, and we could start closing above this upper quadrant up here above that 108 and change, then the door is ajar to go up to 113.60, 114.95, onward and upward we go. But I would definitely, as we get up to this zone, take aggressive profits yet again, because it could turn down and possibly make a new low. This is typically what you see when you start breaking the magic fibbo line. You go and test it, you kind of grind lower, you go up and test it again. And this is critical at this point. Do we break it to go higher, or do we fail again yet to get another flush down towards maybe 101, 100 parity area? Any questions on that? So right now, my breakup was what we were looking for. We expected that. We got it. Now this little retest is fine. And as long as we hold this area, we start breaking above this 104.50, 105 area, that swing point, game over. We're going up to 160, 106.50-ish right there. But that's where I think we're headed. I think we're stair-stepping our way toward this level, as I think we're definitely stair-stepping lower after we broke the trend line, we broke down, We broke this trend line here to set the tone. Then we took out the first level of support. We tested the next level of support, and this bounce looks a little anemic. Still got a downtrending line holding. So this is why I think we're headed here. What about the pound dollar? Again, if we're going to go towards the magic Fibbo line, not only is the euro going to start heading toward its magic Fibbo line to the upside, but the pound is likely to start heading toward its magic Fibbo line up here. So far, so good. We got a nice big bounce. Yes, we got a little bit of a pullback today. That's okay. That's typical when you break a downtrending line via then break a big resistance level. We went up to the next battle zone. Can't make this stuff up, right? Can't make that stuff up. Right to the next battle zone. And we got a little dip. So yeah, this looks good for us to go up here. Randy, that's where I think we're headed, up toward this 127. And we're stair-stepping our way as the dollar index continues to break down. Why do I keep looking at that? Remember what I said? We break the down, this uptrend of highs, higher lows, that is. When we broke that, I said we're likely going to test this zone. We did it. I said if we break and close below that, we're likely going here. So this little pop, I still think it's going to end up with the lower high, lower low, and we're headed here. That's why the pound is likely headed toward its magic Fibbo line to the upside, and the euro dollar toward its magic Fibbo line to the upside as the dollar breaks down to its magic Fibbo line here. Now, definitely take profits when we get down here because it's quite possible we could bounce off of there. But then all we're going to do is from the swing point high to the swing point low, we're going to bring this down. And if the bounce manages to get back above this 108 and change, then it's all about we're going higher. And if not, and we get this stair step lower, and we ultimately come test this, we bounce, and then we try to make this 618 bounce and we fail, then that sets up the next big down move, which would be testing our big zone over here, my 618, right around that 103.90, 102 area. So if we fail this bounce and we start breaking below the magic Fibbo line and we take out that 103.90, then it's game on. We're making some new lows, 98, etc. So if that picture comes into play, what does that mean for the euro? That means the euro is going to start making its move toward that 113 up here. So we start, dollar index breaks its magic Fibbo line to the downside, starts closing below that 103.90 area. Then that's going to mean we're going to be breaking the magic Fibbo line to the upside, and we start closing above this 108 area, then it says highest probability, we're going to go visit 113.60, 114.95. So this is critical. I do think we're going to go test this, but do we hit this level and break lower? Do we hit that level, do a nice little 618 retracement to then bounce? But this is the critical zone up here. When do we start salivating for hundreds and hundreds of more pips? When we break 108. This 108 and change, then we can start talking about 500, 600, almost 700 pips from 108 to 115. I like it. I like it a lot. But in the short term, we're talking about this bounce, right, Randy? And we said we're likely going here when we got what we needed, and we did. So this is where I think we're headed. How about the pound dollar? Again, from this low down here, right around 121, we went up to a high of 125. That's 400 pips. I talked about this break when the dollar index finally gave us the nod. This would give us the nod. What a close above that resistance level. And it went right to the next resistance level like clockwork. So the bias is we're going up still another few hundred pips to test this magic Fibbo line. And what if? that happens. Well, same thing. You would take the swing point low, this is off the high to the low, and if we not only get up here and test this, but we start breaking above this 129 and change up here, then highest probability the pound's gone ripping toward 136, 137.97, 138, right? So this would be my target way up here if we can get above 129. But first things first, that's the long-term target, sure, and then some. We're going up to 170 in my multi-year projections. But this is first things first. We got to get above the magic Fibbo line. When we do that, we break the 618 at 129 and chain. Then we can start focusing on 136, 138. Otherwise, I'm watching this support zone was former battle zone was resistance. And I believe if it comes back to retest it, it should act as support. So this stair step should continue up toward this 127 area. All right, so that's the plan. Keep stair stepping toward 127 as the dollar index keeps stair stepping lower towards this 105 area. And as long as we stay below this downtrending trend line and the 618 zone, then the bias is we're going to not go higher. Obviously, we're going to keep going lower. And I know this is not my 618 level target at the moment. That's if we get down to the magic Fibbo line. So we come back to where we are, and we have to break this red box up here before we go bullish. So this bounce would have to A, continue, break this trend line, that's first, and then start closing above basically 108, basically 109, this 109, 109.50. So if this is a reversal from here and we start closing above 109, 109.50, then by all means, there's a point 106 and a half, 111, 110.60, 111. But the bias is we're going to keep doing this kind of thing and we're going to stair step lower till we get here. Then we can reassess. Do we bounce and do a 618 to fail, or do we bounce to then go on and make some new highs on this dollar index? We shall see. But the writing's pretty clear. This is stair stepping lower toward our magic Fibbo. Any questions on that? So, what is this week? This week is a big week. It is, let's go over here to our calendar. I think I have it open over here somewhere. Calendar. And let me make sure we're on the right week. 27th. What is this week? The markets are going to be somewhat subdued. Somewhat subdued because of FOMC. This is what all eyes are going to be on. What's the Fed going to do tomorrow? They say they're going to hold rates. I know President Trump would like them to cut rates, but the Fed doesn't work for the government. Trump can't fire Powell, but he can next year when his reappointment comes up, he can take that away, but he certainly can't fire him until then. So let's see what Mr. Powell does. Right? Is he going to cut rates? Is he going to leave them alone? Right here says they're going to leave them alone. I tend to agree with this because of our magic chart we've been discussing for quite some time. That's our DGS2, which is the 2-year maturity rate, Treasury maturity rate. And this red line is the Fed fund rate. And notice we're right in that zone. The Fed rate is right at the 2-year maturity rate. We're right in that zone. So if we start cutting one more time, that's going to put us right at our current rate. And typically, this blue line, every time, most recently, we started cutting rates, it started to run. And then we cut rates again, it ran again. So we're consolidating. What I really have been watching is this right here, ladies and gentlemen. We have a three-wave move after all the big, you know, 0.75, 0.75, 0.75, the highest we've ever done in history, as fast as possible. We're trying to catch this rate. That's what the Fed does. The Fed doesn't make the rate, they chase the 2-year maturity rate. So I really think they should have topped out about right here and stopped raising rates. But they were worried about when they saw this information here, they raised rates. Should have even topped out here before raising yet one more time. So they just kept raising and raising. And I guess they were afraid of this action here. Was it going to go breaking out? And they didn't want to start cutting rates right away. So it'd embarrass them and make them look foolish. So then they paused. But you remember the conversation we had back then. I said, we're probably going to have a period where they stop raising rates and we consolidate for a while. But do we then get the big run where we have to raise rates? This is still possible, especially looking at, as we started topping out, a three-wave correction. And does all of this rinse and repeat and labeling and waves work on maturity rates and Fed fund rates? It works on everything. So from the high to the low, we start getting above that 4.54, which we're not far from it. Then it says we're likely going to 5.4 and 5.64. Well, that would mean the Fed would raise rates. What's the key behind that? Oil prices. Oil prices start to escalate some more, then that's going to force all inflationary pressure to come back. And again, we start breaking in the 80s into the 90s, then everyone's going to have to start changing their pricing in all goods and services. So inflation could come back with a vengeance. So remember what the Fed does. If this blue line starts ripping higher, they're not only going to not cut rates, they're going to have to raise rates. So this is why right here where we are, we're right in that zone that if they cut rates, it's probably going to make the rate below the maturity rate. And if it starts popping and running off again, guess what the Fed's going to have to do? Well, I'm going to quit cutting rates and I'm going to Ralph Cram them and start raising rates. So I talked about this a few years ago, that inflation would probably be subdued for a while and we may get another push of it. And if we do, the Fed would have to continue raising rates, not cutting rates. So be careful. I think the markets are definitely going to be subdued until then because of the big FOMC here. So be careful with that. And what I also find interesting is normally before a big Fed rate hike and meeting, there's a bunch of talking heads out there, FOMC speakers. Well, look, there's no FOMC speakers on the ballot. Interesting, isn't it? I mean, we always see every speaker, all of them come out and talk and talk and talk and talk. And even the prior week, last week, coming into the FOMC, I don't really see any FOMC speakers. Interesting, isn't it? This is not typical. So they're keeping it a hush hush. Just going through here, no FOMC speakers. Y'all notice that? Kind of strange that they're always out there. Everyone wants to get a chance to speak. And no cigar the week before, which again is somewhat rare. The week of, you typically see a lot of FOMC speakers kind of moving in toward this rate decision, but there's nothing on tap. Come all the way up to the top. No FOMC speakers this week, which is not the norm. Interesting, isn't it? And then even next week, there's just a token appearance next week, which is somewhat interesting. Go over here and go to February. And we'll get February 2nd. But coming out next week, this is after FOMC. We got Bostic. I mean, it's token, and not many. And Goolsby. So we got a Bostic and a Goolsby, and that's pretty much it. Normally you see everybody and their brother out. So something's a little funky going into this. And is it that he's going to do something that's out of the norm? And he wanted to keep everybody hush hush. So what I would recommend doing this week, especially trading the S&P, Dow, NASDAQ, etc., be careful. I think it's going to be subdued going into this rate hike or rate cut or lack thereof. So I think I'm going to name today's class FOMC tomorrow. Is it going to be a FOMC pop or an FOMC drop? What's it going to do? Is it going to rip or is it going to dip? We shall see, but be careful. I think the market's going to be somewhat subdued. And looking at what's going on right now, I believe I have one of these up here somewhere. I didn't open it today. If not, I'll do it tomorrow. But looking at this, probably they should, in my humble opinion anyway, leave it alone, because when you see this and how close the Fed rate is to the current maturity rate, I wouldn't be too aggressive, because if they keep cutting rates and this baby does this little thing here, with this three-wave move, that's setting the tone for this first leg up, little retracement, then another pop. So if that's the case, they were to cut rates tomorrow, maybe make Trump happy, but then the blue line starts to race off, and then they're going to have to go, well, from cutting interest rates to raising interest rates. So this is critical. And again, the catalyst behind, does this line go, the blue line, that's the 2-year maturity rate, does it go ripping higher? Well, the catalyst behind that would be oil prices. And our oil prices have been, we'll go over this in a moment. Just 1 second, I'll take care of that while I'm on this topic. But look at what we're testing. We came down from the big run up, and we're testing the magic Fibbo line. Randy, can't make this stuff up, my friend. Cannot make that up. This is why the magic Fibbo line should be on every chart you ever put down there, along with the software. Keep this on there. If this holds, and then we start to see when does oil prices go bullish again, from the high to the low, we hold and we start bouncing, we get above 77 and change, about 77.70, 78 area. We start holding above that, then we start targeting 82, 83. Is that what's about to happen? Well, this is a measured bounce right now. Right now. It is a measured bounce / EMA bounce, in this case, the magic Fibbo bounce. This could be a combo meal. Yes, we got to prove it by bouncing and going up a little bit higher. But if we can take out that 78, game on to go to 82, 83, might even get a little feisty going up to 86. And what happens if oil prices start going up here? I think you're going to see this DGS2 blue line start going higher, right? Start moving higher, ripping higher. And we're going to leave the Fed rate in the dust, and the blue line, like this blue line here, starts ripping higher toward these targets, right? They start ripping higher toward these targets, and guess what Mr. Fed's going to have to do? Uh-oh, Houston, we made an error that we shouldn't have started cutting rates so soon. Now we have to go back and raise rates. So be careful with that. That I'm not convinced, based on a 3-wave correction, that this just clearly says this is the end. And based on the high to the low, we start getting above this 4.54 area, which we're at 4.27. That's not very far to start to set the tone. We start closing above this level, then it's likely we're going to go visit 5.42, 5.64. And I can assure you, Mr. Tucson, if we get up here in this zone, that's the maturity rate gets up there, and the Fed rate is either where it is or they do cut rates to bring it even lower. And then we start getting up here. Guess what they're going to do? Start raising rates fairly aggressively to start catching it again because they're worried about this thing racing off like it did last time when they had to do these 0.75, 0.75, 0.75 was insane. So be careful. This does not bode well for this continuing to go lower, and the Fed keeps cutting interest rates. The three-wave nature of that move says we're likely going higher than we are going lower. And if that happens, without Elizabeth, I'm coming to join you, honey, an absolute market crash, sure. When does the Fed cut rates? We've discussed this numerous times. I'll go out to the weekly and give you the big picture. But the last three market debacles, the maturity rate crashed and the Fed had to cut rates. COVID. Back in COVID, even before COVID, the chart said we were due for one of these. And then COVID kicked in later and then continued. But that set the tone. When the maturity rate ran off from the Fed rate, they had to cut rates to chase it down. And then over here was the 2007, 2008, kind of topping out at 2008, 2009 debacle. That was the real estate bubble burst. I got to have a reason, kind of name what's behind it. And the one before that was in 2000, dot-com bubble burst. So what's this one going to be? It's coming. It is definitely coming, but do we go higher first and then we get it? Or does it come sooner, but it's probably the commercial real estate bubble burst? So it's interesting to see what's going to happen here. But do we go up? Do we go down? Let's see. But if the Fed cuts rates today, I mean tomorrow, it's not good because now we're going to be at or below this 2-year maturity rate. And as we showed you, as we zoomed in, the last cuts, this maturity rate went zooming off. So let me bring this back down and zoom up at the recent price action. And when they started cutting rates right there, what happened? Maturity rate started to rip higher. So maybe another one we rip, and then this is inverted. And then, yep, Fed has to start raising rates. Not out of the question. So keep a keen eye on that. And my humble opinion, all this is discussing this. What do we think the Fed's going to do? I think they should hold rates. I think it's a mistake if they cut rates. And we shall see how this plays out. But be careful until then. And before we jump into the markets, combining that with where I think the S&P, NASDAQ, et cetera, are headed, let's jump over here for just a moment to pick back up our dollar yen trade. I warned you a big correction was coming. I'll come back over here and do the dollar yen trade. That likely coming down to this EMA, got a little bit of a bounce. We did get Japan to raise rates, which was a shocker, 0.5 point. See if that's on my calendar here. Well, anyway, by raising rates, that kind of set the markets on a little bit of a tizzy. And the yen strengthened along with yesterday's decline of the market. So I don't see it. BOJ. Yeah. CPI, a little spicier. So their CPI starting to bounce and go up a little bit. So that's probably why they did that. But anyway, let's go back to the chart, needless to say. And this is what prompted that sell off. We're getting a little bit of a bounce today, but look at what we have. Kind of looks like the other charts. We have some downtrending lower highs, right? Lower high, lower high, lower high. And that just kind of spells the likelihood we're going to head down to this magic Fibble line. So be careful on any bounces right now. I'm really not looking for a breakout. I'm looking for more downside. And based on this latest move, that maybe we come down here, get our little move. This could be like a little 1, 2, 3, 4, 5, A, B, C, and we could bounce from there potentially, especially if our Fed starts raising rates instead of cutting rates. That could get this thing back in the ball rolling. But just based on price action, I was warning you about this. So I took profits up here. I'm likely going to get a further decline, and I'll look for some opportunities. But I'm going to just kind of pause on this for a time and wait and see to see if we can come back and get a measured bounce off of this level, which would be from the prior low to high. Do we get yet another measured bounce to set up more upside? Or do we start from the prior low to high? We start getting to this 618 area and we start breaking below the magic Fibbo line. Then the door is ajar to go down here to 147, 145. So this is what I kind of want to see. Do we come and retest this to bounce and go breaking out? Then we go game on to go higher, start pushing back toward 59.60, 159, 160. Or do we come down and start closing below this 152 area, which would be below the magic Fibbo line, and set the tone we're looking for 147, 145. Amen? So keep a keen eye on this. Do we break out? Do we break down? Well, in order for me to get bullish, just based on this little bounce, it's still a downtrending higher lows, right? Lower highs, lower highs, lower highs. So do we get that bounce and go up, or do we continue lower? I would need to see a close above this trend line. And you know what's coming. If we take that and then we go over here and grab this high to low, current low, we would need to break back above basically 157. So if this rally can continue and we start breaking the trend line, we close above 157 and change, then I'll start targeting 159.60, 160. Everybody with me? So the long of it, the short of it. I'm not really gung-ho, even though this bounced, to make a position to shoot for these targets up here until price proves otherwise. Right now, this price action looks like it wants to go lower down toward the magic Fibbo line. Then what do we do there? We hold it, start bouncing, then we still got to get above the high to the low, break the 618 to give us reason to go long. If we fail and break the magic Fibbo line and take out that 152 and change, which is kind of right at it, then the door is ajar for a short position to start shooting for 147, 145. Now, Randy, what does that do to the pound yen? Kind of the same. We broke the EMA on the pound yen. We're retesting it back to the upside. So when do I start getting bullish on this? Not until we start closing above that 195 area. Still got another couple hundred points to go. Start closing above that 195, 196 area. From this high to low is 195. From this prior high, which is slightly higher, to that, let me get that same low. That would still put us right around that 195 kind of overlapping areas. So up and until I see the pound yen start breaking 195-ish, say 195.50-ish, right in this area. We get a close above 195.50 with a candle body, not a wick. Then I can start targeting 199.200. And confluence of events, 200, 201. But again, this idea, we broke the trend line, the magic Fibbo, and we're testing it and so far failing. That makes me want to think we're going down. Amen? So short of it for pound yen, when do we go bearish? Well, off of the most recent bounce that we've been in, from that high to that low, or this low to that high, I should say, we start closing below 191.40, and then the 786 right at 190.50. So we start closing below this box area because it's a battle zone, and we see these spikes and where they held, and it's a former zone over here and resistance support. So if we start to see this decline continue, let me get my arrow. So if this decline continues and we start closing below, say, 190.50, game on. 188, 187, 186, which sets up the bigger 186, 185. Amen? So be careful with this. This is not looking real bullish for the pound yen at the moment, because we rallied into the magic Fibbo line and we're struggling. And so far, since we've been struggling, we're making lower highs. And let's see if we start getting some lower lows. And if we start closing below that 191.50 slash 190.50 in this area, the rule is we close below this line right there, candle body, sets the tone. We're going to 188, 187, probably onward, downwards toward 186, which fits the prior high to low, same scenario, the same target. So confluence of events would mean that if I do see this start breaking that 190.40, 191.40, 190.50, that's that zone, 618, 786. If I see a close below that, I'm all for shooting for about 186, which would be in excess of about 400 plus pips. Not too shabby for us to decline from 190 down to 186. Sounds good. Otherwise, if we can turn this thing around, start closing above 195.50, then we could do our 400 points to the upside. So in the middle, I expect to see some chopping, basically go sideways. But if we break above 195.50, we're going up 400 pips. If we break below 190.50, then we're going 400 pips to the downside. So that's the way I see the pound yen. Potential 400 pips up, potential 400 pips down. In the interim, I'm just going to let price prove its intention. I'm leaning more bearish than bullish because of the fact that we rallied back toward the magic Fibbo and we're failing to break it. So if price proves otherwise and we break up above that 195.50, then I go long. If it fails and we continue to drift lower and we start closing back below this zone of that 190.50 area, then I'm all shooting for that 186. So what's it going to be, ladies and gentlemen? 400 pips up or 400 pips down? Force price to prove its intentions. So here's my bracket from here to here. There's the bracket. So all of this area means, yeah, I can scalp in here, but I'm really not trying to do anything else but scalp. We break this level, then we could shoot for a 400 pip position down. Or if we close to the upside, we can shoot for a 400 pip move to the upside. In the interim, this means scalp, scalp, take profits, scalp, 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 and right there. All right. So Again, I'm leaning more bearish because of the fact that it's trying to bounce and it's going directly into, like the last time we had our nice big bounce, right, Randy? That was a beautiful 1,000+ pips up. Ooh, that was a beauty. What did it do? It closed above that EMA. It tested the first day. The next day it closed above. Well, this one looked like it was closing above, but what happened the next day? It held, then it took off. Well, this is not holding and this is testing, and so far it doesn't look very bullish. So this is not the same as that to go higher so far, in that it's struggling. Over here, we didn't really struggle. We closed above, we tested, held, we tested, held, we tested, boom, took off. Well, we tested, we're holding below, not above. We tested, we're holding below, not above. Where over here, we tested, we held above. Got it? So there you have it. This is looking a little bit different, and we're likely going to get the flush down more than up, but I'm willing to wait to get the clear guideline to say, hey, this thing is ready for its 400 pip drop, or it's ready for its 400 pip rally. Okay? All right, so now let's go over here to ES. We had this big yesterday. Everybody know what that was? They want to say it was because of DeepSeek and the China deal. That's the reason. That's the reason. NVIDIA tanked. NVIDIA lost 600 billion with a B dollars yesterday. Oh, but didn't I warn you, Emil, and everybody about NVIDIA needed to have that big correction? Is it over? Well, we can check it out, but that's what this was. And notice how the S&P came back. What I find interesting, even though we had a down day, I think what's going to be this inside day today, maybe up until half day tomorrow, really not looking for the S&P to go breaking out. I'm not looking for the S&P to go breaking down just yet. It's all eyes on FOMC. And FOMC says that, do we rip or do we dip? I'm kind of thinking because he's going to hold rates and maybe talk about future cuts in his statement, it may go ripping. So I'm slightly, like I was leaning a little bearish on the pound yen, slightly more bearish than bullish. Well, I'm leaning slightly more bullish than bearish right now with FOMC. And we're probably going to get a run out of it more than we're going to get a decline, but it's close. Maybe 55, 45, real close. But leaning slightly, we're going to go up more than down. And this rejection wick, what I found interesting, even though we had that big dip and sell-off and a recovery, notice what our barometer did. What did our barometer do? This is the daily chart, right? I turned this to the daily instead of the monthly. And even though we had the big sell-off, check it out, we actually had an up day. And even though it's dip, it didn't even come and close below the prior day. So normally you see a big sell-off in the market, you get a big down day on our, how many companies above the 50-day moving average. And look, we actually got an up day on that. Interesting that it actually went up when the market went down. But what happened was the 600 billion that came out of NVIDIA went back into other S&P 500 stocks. Real interesting. So that's why, let me get this out of the way. That's why we can see this inside day and we're getting this retracement back up. So what else is important that I still more bullish than bearish? Check out what happened. Where did we go and test, Mr. Tucson? From the low to the prior all-time high just the other day, we did a 618 retracement. Look at that, to the tick. Huh. Also, if we extend out our little trend line here, downtrending trend line, in the middle, we had some wicks and some bodies, and wicks trying to get that. Maybe a little bit closer, make this retest even look more impressive. Body, wick, 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 body, wick. So this was the trend line we talked about we needed to break to set the tone to go higher. We got the 618 close above, right? We got that. So that said we're going up here. So guess where we're going? We're going up here. 62, 62.50. We're going. Now, is this the 618 retracement? Retest the trend line and then go up? That's what I'm thinking. Because if this was going to continue lower, then how do I change my tune? That would come down here. We have to break the trend line to the downside. That's a start. And retest. We retest and look at that rebound. And when I saw NVIDIA and the market tanking, but yet how many companies above the 50-day moving average actually started to move higher when the markets were moving lower, that just said that all that money in NVIDIA was losing was taken out and put into other S&P companies. How about that? So this looks good for our 62, 62.50. Any questions? Be careful. Don't think that this baby is going to go ripping up here today. I doubt it will. I think we're going to have an inside day between this level. And let me get that out of the way. Here's my inside day between this big candle yesterday, between this level and that level. I would not be surprised to see us in this zone today and even first half of tomorrow until FOMC. And then post FOMC, do we get a head fake dip, then the rip? That's what I'm going to be interested to see. If he leaves rates alone and then talks about future cuts, market will probably rally off of that. If he mentions anything about rate hikes, the market's going to go dipping. And if we take out that support zone, which is our 618 retracement level, and we close below the trend line and that 618, we're definitely coming down to the magic Fibbo line. Amen? So what's it going to be? I'm leaning this way. I still think even though we did this, Emil, even if we got that, man, I'm backing it up because I think we're definitely going to 62, 62.50, maybe even punch junk euphoria, continue towards 63 up there. Woohoo! Let's get it. So be careful today. Don't expect we're going ripping. I don't think we're going to see us break this zone, this line here and there because of that inside candle. I think we're going to probably have that today and maybe even up to half tomorrow until FOMC announcement. Then I think we'll get market direction. So FOMC should give us market direction. My bias is a little bit more upside than downside. But worst case scenario, he mentioned something about maybe rate hikes and the market freaks out and we get a market dip instead of a market rip post FOMC, then it's salivate country down here. Amen? Any questions on that? But the bias is we're going there. Even if we came down here to retest, we're still going up here. This is inevitable. No ifs, no buts, no ands, no exceptions in my humble opinion based on the technical picture. And we're going to grind towards 62, 62.50, but I don't think we're going to get there until after FOMC. And let's just take, for example, Mr. Tucson, this does flush for jaw boning or whatever reason, then this is certainly a good buying opportunity because we got what we needed. We even took out the 786 from the prior high to low. We got the 618 close above. We got the 786 close above. We're going to 62, 62.50. And this little setback is perfect. All it is a retest of the trend line. It's a 618% retracement. So it's a perfect bounce to give us this, to add back to what we already know was this. So let's do this, and it gives us a little bit even better targets from this high to the current low, we start closing back above this 6,100 area. Then we start targeting, look, confluence of events, 62, 62.50, 62.20. See it? Talk about confluence of events. Huh. So this is why I'm definitely leaning more toward upside than down, but I just wanted to throw that in the mix. If for some reason FOMC flushes down here, that is salivate country to get back up to our 62, 62.50 and quite possibly continue toward 63, 63.50. Okay. Any questions on that? But very interesting how all the markets sell off. Money came out of NVIDIA shock. Ooh, what's going on with NVIDIA? Lost 17% by the end of the day or whatever it was, but huge $600 billion, and that money that came out of there went into S&P stocks because our barometer showed up. It didn't lose anything. You normally would expect something like this. Like a lot of these companies above the 50-day average starts declining, not increasing during that big flush. Very interesting to say the least. Got it? So in closing, we're going to 62, 62.50. And again, in my humble opinion, no ifs, no buts, no ands, no exceptions. Even if we get the worst case scenario, we get a flush, we're still going to go up here. But my bias is FOMC post as we go through Wednesday afternoon, Thursday, Friday, we're going to start grinding up toward these targets. And let's see where we close. Again, a close above another few more points, start closing above 6,100 area. Then it sets the tone for these targets yet again. And we got it from this high to that low. We got it going there. And from this high to that low, we're going to get it again. That's just a double whammy confirmation of where price is headed. And I like those double whammy confirmations. What about NASDAQ? NASDAQ, somewhat similar. We had the big sell-off. We had a nice recovery. It's a little bit different because we didn't go on all-time new highs like S&P did the other day. We made a lower high. So I'd be careful with this. That is this going to go ripping or is it going to go dipping? We shall see. But my same rule, based on the high to the low, we did close above the 618, which says we're going to 22.6, 22.8. That's still the target. In my humble opinion, we're going up here. But is this flush over and we're done? Or is this going to give us one more flush, then get up there? What's it going to be? I'm still leaning more bullish than bearish, and you can understand why. Prior high to low set the tone, we're going up here. Now we do the same we just did with the S&P. From the high to the low, we got to start closing above this 21.6 area. We start closing above 21.6, then it sets the tone. We're going to the 22.4 area, maybe 22.8, which kind of coincides with this other one. So yeah, that's why I still think we're going up here. No question. Is this the end? Notice this big rejection wick. From this low to that high, look where that 618 is. Look where we closed. Isn't that amazing? Let me zoom in on that so you can get a better appreciation of this. From that low to that high, my 618 is right there. Yep, right there. And what did it do? It dipped and went right back to it, 618 level, and closed right at it. And today we kind of dipped and now we're still above. So after all that, big flush, oh my Lord, what's happening? Emil, what is going on? still closed above the 618. And we tested it again, and we're closing so far above the 618. So we're going up here. 22.6, 22.8. You want lower targets based on this one. We start closing above this right here, this 21.6 area. Then we can start targeting 22.2, 72, 22.425. Be my first targets, followed by 22.6, 22.8. But I still think this is going to go there. And eventually we're going to go up there because of that move there stating the same thing. All right. So today, what are we going to have with the S&P and the NASDAQ? We're going to have an inside day. This candle is going to close inside of this big zone. Well, that's a bright deduction. Well, it is what it is, but it's still going to be an inside candle. And the reason I don't think we're going breaking out just yet is because FOMC, all eyes are wait and see. And again, if we get a flush, that is salivate country, right? We almost got down here. We didn't quite reach it. We bounced. We're at a lower high. We're at a higher low. If you start looking at highs, lows, lower high, higher low, and we're right dab in the middle. The reason I'm still more bullish is from the low to the high. It closed right at my 618. Big rejection. That's why it doesn't matter if it's a wick. It has to be the body. It's an exact example right there, man. And then boom. So we go up a little bit more and we start closing above that 21.6 up here. Then we start looking for 22, etc. We still have a couple hundred points to get there. But if we do, then back on to our targets. Even if we don't and we flush down here, salivate, because we're still going up here. So no matter how I look at this, we're going to make some all-time new highs again, and we're headed higher. All right. Only one I'm more concerned with is the Russell. It's still just not participating. Broke the trend line, retested it. That part looked good. But look at these candles now. We may need one more flush. I would love to see this thing flush down here to set the tone for a big buy. But in the interim, when do we still hold? It's like we've been doing. From the current low to the current high. As long as we hold this big green box, which is the what? Magic Fibbo. Can't make that stuff up. You see it for yourself. That's the magic Fibbo. So personally, I'd love to see this. I'd love to see a little bit of a sell-off, come back and retest that trend line again, but this time reach the magic Fibbo line, then bounce to set up some new moves higher. And best case scenario would be a big flush down here, a salivate country for the next big bounce. So watch this one carefully. This one just isn't participating. S&P went on to all-time new highs. NASDAQ went up to a lower high, but this guy didn't even make a 618 retracement. That is not bullish, right? Where we see a nice little bounce, but it still hasn't come up to where the 618 is, much less break it like the S&P and the NASDAQ have done to warrant their new all-time highs. This one has not even tested it, much less taken it out. So I wouldn't be surprised to see a flush at least back to the magic Fibbo line. And if the magic Fibbo doesn't hold, we're going to come down here. Then we're going to bounce. So again, I have some alerts set. So if we can come down here, man, this is a good opportunity to buy and look for this thing to go ripping. Otherwise, at least a retest of the magic Fibbo line would be helpful. Why? Because from the low to the high would be yet another measured bounce / Fibble combo meal, Fibble line bounce combo meal, and that sets the tone for much more upside. Amen? All righty. So any questions on that? If you do IWM, same kind of thing. Got a beautiful bounce, but here's the zone up here. We got to get above that 233 and change before we start talking about 249, 253, 263. And so far, we're holding from the low to the high. We're holding this magic Fibbo line, but I would really love to see at least that to set the tone to retest this target. So if we bounce off of this 220, I'd be targeting 230, 235 area. Then if we break that, then we can start targeting 249, 253. And if for some reason this pullback doesn't hold the Fibbo, magic Fibbo line, then we start targeting 210, probably 205 area, 204. Man, we get down here, that is salivate country. Because I still think we're going to get a big run. Amen? When's it going to be? Do we dip first and then go? Do we come to the magic Fibbo line and go? But I would be careful about this thing just going ripping up from here. We still got this massive resistance up here we got to deal with. And if for some reason you decide to scalp this thing to the upside, I'd definitely be taking profits when you reach that 230 area, 233 and above. I'd definitely be in a position of authority because sure, it could possibly do something like this and still go on to these upper targets, but it could also be flushed down before it gets up there. So that's why even if you do a short-term scalp up here and you get there, I'd take profits because this thing could certainly get rejected to come back to the magic Fibbo line to bounce higher or a big flush to bounce. And the reason I'm even thinking flush, look at all that overlapping pricing action. What's the problem with this? Look at this overlapping pricing action. A lot of overlapping. And even if you start to say, well, if this is 1 and this is 2, then we need to see a real push out to here would be the normal Fibbo. So typically when you look at Elliott wave, your first wave will go up, your second wave comes back to about a 618 retracement. Then your third wave goes up to your extension. So if we did something like that, where this was the high, this was the low, then we came back, Randy, this would be wave 1 up. We get a wave 2 retracement toward that 618 retracement area, which would be the Fibbo line. Then we would expect our third wave to go up somewhere between this 240 area for this to look like a 1, 2, 3, and then your wave 4 shouldn't come back into the area of wave 1. So you expect a higher low. Then we could go up. That would be a bullish, impulsive move. But we started to look at these and we were getting these, and what was the problem? We went back into the area where we previously were. We went back into the area where we previously were. This is a lot of overlapping, chopping, grinding, grunting, corrective action, which makes me believe we probably need a flush to reset the tone. What is the flush now? We need to make a new swing point low. Could it be 209, 211? Sure. Maybe it is that. Maybe we flush down here to make a new low, set up all of this overlapping action to set the tone for the next move. But anything to 210 or lower, that is salivate country to go back up. Even on this Russell. So let's see how this plays out. In the interim, from the low to the high, let's see where that 618, which is right at the magic Fibbo line, this could be a measured bounce and a measured Fibbo line bounce combined, and that would set the tone for this upper targets. So be careful. I think we're going to get a flush. Is it here to bounce, Or is it one more deeper flush to bounce? The deeper we go, the more I like buying it because we're still going to make a run back up into these zones. Okay. What about the Dow? Look at the Dow. Dow says we go into 45, 45.9. Amen. We're going. Even yesterday had a big scare and then it turned up being positive for the day. So a lot of that money from the NVIDIA went into S&P and a little combination. There's both stocks in S&P and the Dow. So those stocks got some money. Look, they had a rally. Not too shabby. So this from the prior high to low set the tone back here on this candle body right there. Says we're going to 45.5, 45, 75% chance we're going to 45.5, 70 plus we're going to 45.9. And now that we got this candle close, reiterates it even more and making new higher lows, higher highs, we're going. Do we get some sort of pullback? Sure, that's fine. I'm bullish the Dow as long, and this is what? Look at that bounce off the Fibbo line. Can't make that stuff up. But as long as we hold anywhere in this 618, 43,000 range, so I'll go ahead and put that on the chart. As long as we hold that 43,000 range, this is massive support. Let me go ahead and turn that to green. Style green. As long as we hold this zone. So Mr. Tucson, where are we going? 45.5, 46. And as long as we hold what? 43, we're going to 45, 46. Amen? And probably we may not even get that big of a dip. But if we were, we see any sort of dip coming back toward this direction, this is a huge buying opportunity. Why? Bingo. We've already stated the facts. Highest of highest probabilities, we're going to 45.5, 45.9, which is right at 46. Nikkei. Nikkei still range bound. Look at that sell-off yesterday. Ooh. Where did it go to? Does everyone have the magic Fibbo line on their charts? You should. Please do, because you can't make this stuff up. So the long of it, the short of it, we start breaking above here. Where we're going? To the moon, Alice. We're going up here to 44.2, 45.8. We have to take out this former resistance we've tested so many times. Have to take it out, then we're going up here. And I would not be surprised to see the Nikkei go ripping up here with global liquidity, and our markets do the same toward their targets. What is that? My 22, well, let's go back over ES, we'll give those to you. My 62, 62.50, 63. If the Nikkei starts ripping toward its 44, 45,000, then this is going to push the 62, 63 area. And NASDAQ, that pushes us up here in the 22.6, 22.8, 23.5 area. Kind of where I'm thinking we're going. And Nikkei would be going where? Up to 44.2, 44.8. So we start to see a break and a break up above this prior resistance zone, massive resistance. But when that happens and this baby starts ripping up here, I think it's going to make our targets rip accordingly. Got it? What if we don't? Well, we've been going sideways, kind of like we talked about. But if we start taking out the support zone, then we're going down. And if we see this big down move to here and we don't hold on further on down, then it's going to pull our markets down too. Kind of like we had over there. When that happened, it pulled our markets down. It started to bounce. Our markets bounced. So be on the lookout. This is global liquidity. But if this baby starts ripping towards 44.2, 44.8, rest assured, ES is going to be up at our 62, 62.50, 63.50. And our NASDAQ is going to be up at 22.6, 22.8, 23.5. Amen? Hands down. That's where it's headed. All right. Black gold Texas tea. The Beverly Hillbillies. This is critical. It happens to be a measured bounce on the EMA. Is it going to hold or is it going to fail? If we start failing and start closing below, what did I say the last few days? Excuse my voice. Trish has some sort of viral infection. She has sore throat, fever, coughing, miserable. She's been popping between 100 and 100.7, 100.2, 100.5. Then she'll take a little something and it goes down to her 98, 97 range. Then several hours later, pops back into the hundreds. She's been battling that for the last few days. Hopefully, I won't catch it. I'm not feeling like just gangbuster. Whenever my wife is not down for the count, I get a little down just for the idea of it. But hopefully, I don't catch it. But anyway, I digress. But notice, perfect 618 measured EMA combo meal bounce. If it holds and we start taking out the swing point, then I think 82, 83 is coming on. Dan, if you want to be more conservative, if this bounce holds and we start closing above that 77, just say 78, we got to close above 78. Then we got a $4 to $5 move coming, highest of highest probability. Now, if this EMA doesn't hold and we start closing what we had talked about, my first line of defense was that 75 target. And if that didn't hold, we'd go to 73. What did we go to? 73, right? Remember that? And if we don't hold 73, last line of defense is this 71 little battle zone here. We don't hold that, then we're going to flush. So I'll put a new box on here. Actually, I'll just move this one over. Put a new box on here. And this is going to be, and I'll move this over that way. But this is up to where the magic fibbo is. My 73 level was critical, down to about 71. And if we start to see this thing falter and start closing below the EMA, and we start not holding 71, game over. We're going to have a flush, and we're going to make a new swing point low. Amen? Which would put us at that swing point low somewhere around 65 or lower. If this holds and we start bouncing back above 78, then it's a good $4 or $5 move, could even go up towards 86. And the more that black gold does that, the more likely our DGS2 is going to continue to run. And the more that runs, the more the Fed's are going to have to raise rates, not cut rates. So let's see if they screw it up tomorrow. Do they cut rates and screw things up? Or do they leave them alone, wait and see? Because last two times they cut at a big bounce, they cut 25 basis points the second time. We had a little bit of a bounce from that low. But again, for those of you joining us late, this is a three-wave correction here. And that says more upside, more than that says more downside. But Gary, that's not a price chart. It's the 2-year maturity rate and it's the Fed fund rate, right? But it still works. And when they started cutting rates, boom, now we're right in the zone. basically our margin of error is right in the zone of this current 2-year maturity rate. So if they were to cut it, that's probably going to force the 2-year maturity rate to bounce. And everybody knows what happens when the 2-year maturity rate races off from the Fed fund rate. They chase it. So that's why this may come into play. Nobody's been talking about this. It's all about we're going to cut rates 4 times in 24, 4 times in 25. We're cutting rates, we're cutting rates, we're cutting rates. And I said from day one during this period, we may get this pause, but we're likely still maybe even start raising rates again. Well, this does not disappoint that scenario with a 3-wave correction. After a big impulsive move up, 3-wave correction kind of sets the tone. We may go higher. And just from the high to the low, right here, 4.54, we start closing above that. Then it says we're going to 5.4, 5.64. And what happens if we do that? Fed's going to have to raise rates. So any questions on black gold Texas T? This doesn't mean, a big rejection wick. It's still hanging on. This is the measured bounce. See where we're holding right at that 618, Harold, right there. So again, we close above 78, 77.67. I'm going to say 78. Close above 78. We're going 82, 83, maybe 86. And if this happens, we start to see oil prices ripping up into the mid to high 80s. Look out. That's going to put the pressure on this graph and likely going to see this baby start ripping higher. And everybody knows, again, when Fed rate, 2-year maturity rate races off from the Fed fund rate, they have to chase it to go higher, or when it tanks, they have to cut it to follow. So that's what they're doing. You can clearly see it. They're following this 2-year maturity rate. Amen? All righty. So in my humble opinion, since the big thing tomorrow is the FOMC, and I believe I have it, actually I have it on this one with the calendar. FOMC is tomorrow, so let me go back to right there, FOMC. So here you go, Harold. What's going to happen, my friend? In my humble opinion, they should leave rates alone, kind of like they're anticipating. What's weird is no FOMC speakers. Normally, leading up into the FOMC meeting, you hear some Fed speak, and then post-conference, you see some Fed speak. Last week, we had no FOMC speakers. This week, we got no FOMC speakers. Next week, there's only like 2. Something's up. They stand hush-hush about something. So I'm just curious. That's why I would kind of just stay neutral. I'm not changing my positions long-term, no, but I'm not really getting into too many new trades at the moment because I think the markets are going to wait and see. But that's why I gave you my anticipated move is more bullish than bearish with FOMC, that if we do get the flush, right, just looking at I think we're going up to these targets. No ifs, no buts, no ands, no exceptions. 62, 62.50, 63.50. NASDAQ, we're going to 62, 22.6, 22.8, 23.5. And Russell's the only one probably going to get a flush back toward the EMA, maybe a measured bounce, measured Fibbo, measured combo meal bounce, magic Fibbo plus a measured bounce equals very strong run toward 236. But if we do get the flush, I really like buying down here for the next run. And if for whatever reason, we don't hold this inside day and we start breaking down and we get a flush down toward the magic Fibbo, this is back to truck up zone for a buying opportunity because we're still going to go up here. even if we plummet down a few hundred points and we go down that 5,800 area in this area, man, that still says we got to go hundreds and hundreds of points higher to get back to my 62, 62.50, 63 and a half. Amen. Same thing with NASDAQ. I do think we're going higher. Even if we get a flush down, we're still going higher. If we get the big flush, game on. That's salivate country. And likely we're going to see this. I love that big rejection wick at the 618. We're holding. All we got to do is go a little bit higher, close above that 21.6 area. Then it says 22.2, 23.4 en route to 22.6, 22.8. Amen. So I'm more bullish FOMC tomorrow because of the big inside candle, the big bounce, the hold of the 618. Look at the ES. Harold can't make this stuff up. Look at where the wick went to. 618 retracement. So this looks bullish. It held the backside of the trend line, held the 618. NASDAQ, even with the big rejection wick, almost a new higher low slightly, almost a double bottom. But look where it closed, right at that 618. So that's why I'm still more bullish than bearish. But like I said, if he says something crazy and we get this big flush down here, that's a salivate country to go back up. Only one I'm not as keen on is this IWM. All this overlapping, chopping price action makes me to believe we want to at least come back and retest the EMA, which is our magic Fibbo line. Or if we don't hold that, then we'll probably get a flush down about 211, 209. That doesn't hold, then down here. But man, if we can get this, or Emil, we flush down here, I'm definitely going to look for an opportunity for a big bounce. All right. And if not, we just get this, then I'm still looking for 236 back to the upside. So how conservative are you? If you're real conservative, then Harold from the high to the low. We start crossing back above 226 area. Then I would target my 231, 232, 236. If not, you want to believe and do a little early. We see this baby come down here, hold and start bouncing. You want to get in a little more aggressively. Then you still got the same targets, but it could, do something like down here, bounce to 618 and still flush. That's why I would take very aggressive profits if I do try to be real aggressive. Otherwise, if I'm more conservative, I'll let it get above that 226.39-ish, 226.50. Then I can start targeting 231, 232, basically 233. Highest probability. But if you're one of those that likes risk and you take the bounce because it hits this line and starts bouncing, then I would take very aggressive profits because a lot of times we could see this come back, bounce, do a 618 retracement, fail to set up the bigger flush. And if worst case scenario, we do flush, whatever reason or ever how it happens, this is salivate countries for a big bounce. Okay. All righty. So any other questions on black gold? I know I just went back and recircled the wagon, but we're probably going to cut it a little shorter today. And I want to go over some things. Let's go to the software. Quick software review. We haven't discussed that in some time. Remember how the software works. When the price action indicator and the trend momentum get in overbought territory, you get down triggers, auto triggers. They fire when you're overbought to the downside, and they fire when you're oversold to the upside. Like clockwork. You don't get triggers unless you're in oversold territory here, we got a trigger. We're in oversold territory here and here, we got a trigger. You're in overbought territory, you get a trigger. In oversold territory, you get a trigger up, you get a trigger down. What are these yellow triggers we haven't talked about? Those are take profit triggers. So when I set the automatic trade management system, I can set this auto trade management system, and I can manually click buy, manually click sell, or I can set the parameters. Once it's in ready to trade mode, you can go into your expert advisor and set up your trade management system. And of course, it allows you to set up how many pip, stop loss, take profits, et cetera, depending if you want to trade on a higher time frame, lower time frame. Then you have the nuts and bolts in here. Do we want to use our fractals? Do we want to use our entry criteria? What do we want to use? The keys are going to be your trigger long, trigger short, slingshot long, slingshot short, and position trigger, scalper triggers. All triggers are good triggers. And the big one down here is profit triggers. I typically don't use the profit triggers when I'm in a longer term, higher time frame trade because my targets are way off. When I use this, it's more in tune of my shorter time frame scalping type trades. But you can turn these off while a trade is running. I can go in here and change this from false to true. Then whenever one of those profit triggers fire, it'll take profits for you. So like on this uptrend, when does a profit trigger fire? You get your trigger oversold, oversold, you trigger higher. It stays in the position waiting for your either hit take profit one, hit take profit two, etc., or this take profit trigger will fire when the EMA, first off, the price action indicator gets towards overbought territory, it'll fire. Then when you get both the trigger and the right here, the price action indicator and the trend momentum, it'll fire, right? So that's why these fire when they do. Why did this thing fire here? Right there, it started to fire because this PAI got into overbought territory. And then it fired again when my trend momentum joined forces, it fired again. It's like magic, isn't it? So this is auto trading at its finest. This is not a trading bot. It will not place trades automatically unless you set it to ready to trade mode. But it's better than a trading bot because I don't always want it to enter trades when I'm not aware of what it's doing. I want to enter trades when I see setups forming. And what I love about this system is I can go to whatever time frame and I know we're going to get a cycle down, so I can set this days and days and days in advance, leave it in ready to trade mode. And then when it gets to its criteria where I say buy the trigger long, it will buy the trigger long and put us in that trade. So we talked about this euro. We could set this for a buy signal, and sure enough, it went up 300 plus pips. All you got to do is set it in ready to trade mode and leave it. Once it's in ready to trade mode, you do not change time frame. Because when I change time frames, it goes back to click to trade mode. That's by design because your take profits, your triggers, everything is different on different time frames. So once I'm in a trade, I can change time frames and the trade's being managed. That's fine. But when it's in ready to trade mode and you want it to enter for you, then you can't change time frames. So what do you do in that case? You put a duplicate chart right next to it so I can do my search. So I'd have a euro dollar chart with this set ready to trade mode, another euro dollar chart right beside it where I can do all the changing time frames and analysis I want to do. Amen. So I still think the euro is going up here to the EMA, which is the magic Fibble line I showed you earlier in here. I'll do it real fast. Here's the pound. That's the pound yen, but let's go to the pound and the euro. I still think we're going to grind up toward this area. Long as we hold the backside, the trend line, and this basically this 103 area, that sets the tone for more upside. So buy the dips in the uptrend till we get to about 106, 106.50. We start breaking that, start closing above 108 area, Harold. Then I could keep buying the dips till we get to 113.60, 114.90, basically 115. So this stair step, in my humble opinion, is going to continue because I think the dollar is going to break down toward its magic Fibbo line while the euro and the pound rally toward its magic Fibbo line. Amen? Same, same. So as long as we hold from the swing point low to the swing point high, as long as we hold this 122.60, the trend line 122.60 area, down here to 2190, so 122, 122.60 area. Long as that holds, there's no reason to believe we're not just going to keep stair stepping and make a run toward our magic Fibbo line. That's the plan, to start running toward 127. So keep buying the dips in the uptrend till we get to 127. How does the software set up for that? We can see that's the euro. The daily still cycling up. My weekly has reversed. We got a hook and a cross. I like the fact that I'm buying dips in an uptrend, at least up to that 106 level, 106.50, right? With a weekly behind it. And we got the daily cycle out of this, weekly hook, weekly cross, daily cycles, daily cycles. No surprise we ran into a battle zone and we're getting a little bit of resistance pullback. That's typical, right? So what's next? We're going to make a higher low, higher high and start ripping toward this magic Fibbo line up here, which my daily's still up. That's bullish. My weekly's behind it. That's still bullish. So no reason to believe the euro's not going to grind a bit higher. Look at the pound, kind of ditto. The daily's still cycling. It's not officially finished yet, as money flow right here hasn't finished. Red and blue's there. Trend momentum is not finished. So this cycle's not quite as far as the euro cycle. Go back to my euro over here, daily. You can see this still hadn't quite finished, but it's much closer, and this is much closer. So this is why I still think we're going to turn over to slingshot in the coming days and weeks to get up here. And my weekly is going to continue to push higher in the next week or so, pushing higher. So this is why we're buying dips in the uptrend up for the next target, up around 106.50. And for the pound, same thing. It's just not as far along. Trend momentum's not finished. PAI is not finished, especially money flow is only halfway. So we should get sucked and pulled into the cloud, which is up here at the magic Fibbo, up at 127. And look at the weekly. Hooked and crossed. Can't make this stuff up, right, Ian? This is why this software is the best out there. Last system you ever need, because this weekly is pushing higher. We got a hook. Is what we call the PAI hook and cross. PAI hook, trend momentum cross. We said this days and days and days in advance during that pullback. Buy that trigger. How do I do that? Back in the day, we just simply needed to set this by ready to trade mode, and it would have bought that trigger, and you'd be up several hundred pips right now. Hopefully you did take advantage of that. You go into strategy, and remember, all you got to do is come down here to buy trigger long, true. I don't want to trigger short. I don't want anything, a slingshot or any of this other. I wanted to force that daily to get oversold, and I wanted it to hook to give me a trigger. And sure enough, it did that. And then boom, you can set this to go much higher. So Randy, we have not only the daily triggering days ago, but my weekly gave us a hook and a cross right here, PAI hook, trend momentum cross. The simple thing of this software, PAI hook is an entry. A hook and a cross means the lower time frame is going to cycle. A weekly PAI hook, trend momentum cross, slope angle separation equals a daily going to overbought territory. It is going to go toward overbought territory. So when the daily finishes the cycle, I showed you a minute ago, it wasn't even finished. So we got more upside. So this is why you want to keep buying the dips on the pound dollar, keep buying the dips on the euro dollar, because I think the dollar is going to break down and these are going to keep stair stepping up toward their respective EMA lines. So this is what we're looking at. We're going up here. We're going to 127. We got a weekly hook and a cross, meaning the daily is going to still finish the up cycle, and a daily showing that we got more upside to come, and this stair step should continue. Highest of highest probability. Combine that with the weekly hook and a cross, that really gives you high probability outcomes for this thing to grind higher. Yes, in the archives, I've been covering a lot more in the markets, but you can do the same with the markets. Why do I think the markets are going higher? You come over to your markets, and that's going to be, oh, actually, it's over there, right here. Here's the S&P. Daily still up. Weekly's engaging up. We got a hook and a cross. So what did I say the other week? We were likely going to get a weekly slingshot back up on this. We kind of drew the Picasso, and we've been slingshotting higher and higher and higher. Why is the weekly continuing to slingshot higher and higher and higher? The monthly still going up, and it's still in overbought territory. It's even doing a little insipid slingshot. So this is why the big one is coming. Look at this. You're like, what? Well, wait a minute. This monthly's just been out of control. We haven't been oversold in a very long time. Last time we went toward oversold after that pullback, it slingshotted higher. We haven't seen the markets in oversold territory in quite some time. Last time was when we had the big crash, 2009. So this doesn't have a whole lot of data in this platform. Let me see if this other one has more. Let me check something real quick so I can show you when the last time we saw the S&P 500 where the monthly was oversold. Yeah, it comes back all the way to the last crash. See it? Elizabeth, I'm coming to join you, honey. Was the last time a monthly got oversold on a PAI and a trend momentum. Bingo. So we've been slingshotting higher forever. Well, that's about to come to a screeching halt. Why? We have this thing at extreme conditions. It's going to end up cycling. When Elizabeth, I'm coming to join you, honey, and we get that big crash we're talking about, we're going to get another one of these. Where the monthly cycles down, the PAI, trend momentum, like we did over here in 2009, well, 2007 going into 2008, up to 2009 before it started to reverse. But that last market crash, it's coming. But I think we're still going to go higher toward those targets. So my weekly still up. That's why I'm bullish. My daily still finishing the up cycle. I'm still bullish. So we talked about potentially buying this dip. Well, I think we're still going to grind higher, and that's where these targets come into play. So the software is saying the same thing on all of these markets as well. And yes, in the archives, I did spend a lot of time more on Forex and other markets than the true S&P, Dow, NASDAQ, but it's all the same. So inside candle today, remember, because of FOMC. And then what? We start breaking above this 6,100 area. That's my 618. Then it sets the tone. We're going to 62, 62.48. Well, Randy, we're definitely going to 62, 62.50. No ifs, no buts, no ands. Do we dip first? Well, like I said, even if we were to dip one more time, that is salivate country because we're still going up here. But I'm leaning more bullish than bearish with FOMC tomorrow, meaning after the announcement, as we start to go Thursday, Friday, I think we're going to start rallying toward these targets more so than breaking down. If I'm wrong, I'm still not wrong, even if I am wrong, because if we get the big flush, then I really salivate, because if we can get down to 5,800 area, then we got 400 plus pips to get back to 62 and then some. So I like the fact that if we get some sort of big sell-off, the Fed brings up potential rate hikes, if such and such, and the markets hate what he says, and we get some sort of big sell-off, that's a salivate area to buy. But I'm really not leaning that way. Plus, market itself, it held the 618. Look at that big wick. It went right to, and it's holding the 618 retracement. That's bullish. And look at this big up day, inside day. So again, I think what's going to happen is probably we're just going to chop and close somewhere in this area today. That's why I said the high and the low off of that inside candle. And then tomorrow, maybe half day, we're just going to kind of chop and grind, whether it's up, it's down. I don't see a breakout coming before FOMC. And then post FOMC, if we get a flush, salivate to buy. And if not, we start closing above 6,100, game on 62, 62.50, onward and upwards to 63. But no matter the outcome, flush or no flush, we're still going up here. Got it? No question. We're going up here. I'm leaning more towards the upside instead of a flush. I'm leaning more towards the upside. I'm just throwing that out. If it does flush, that's even better. That's so much better because then I could buy down here with the same targets as opposed to buying at 61 with a 62, 62.50, 63.50 target. I could buy down here at 58 with a 62, 62.50, 63.50 target. Got it? Same thing with the yes, you're asking, is there a section in archives that is basically solely focused on the software? Those are the learning modules. They're old, but they're still relevant. So, I mean, the software is the same since it came out. We added some new bells and whistles. The hook and the cross was developed through AI type of smart intelligence that's continuing to build. That the smarter this system gets, the more I add to certain things like the hook and the cross. We knew a lot of this information, but the hook and cross really developed a few years later as I was able to do more testing and more understanding. That went a monthly hooks and cross, the weekly cycles, weekly hooks and cross, the daily cycles, daily hooks and cross, the 4-hour cycles, etc. But there is the learning modules that breaks down the triggers, the take profit triggers, all that is covered. But I'll tell you what, Randy, come tomorrow and I will do a big class on that anyway, because it's been a while and we can use the newer information. That's why I started today talking about when these fire, when you're overbought. Let's go to a lower time frame, that's a monthly. But when they fire, you never get triggers up unless you're oversold. Will not happen. You do not get triggers unless the PAI and the trend momentum are near overbought. In this case, oversold territory for trigger higher or triggers lower. It's always when they're in overbought territory. And territory is an area. It doesn't have to be at these extremes all the time. It can be closer to extremes, but then you still get them, right? This one wasn't clearly as high, and then this one is much higher, and you still get them. So that's what that's about. And then we have these yellow triggers, which are called take profit triggers. They fire to the downside when you're long or take profits in a long trade, and they fire to the upside when you're short for take profits to the downside. And they will not fire unless your PAI starts to get overbought, then your trend momentum starts to get overbought, they fire. Got it? Over here, they were overbought, it fired. Fired, getting overbought, fire. See it? So these are important to use. I use these all the time. Don't get me wrong. When you see in my trade management system, when I'm doing a much longer monthly, weekly, daily type of trade, I don't usually turn them on initially, but you know how the trade management system works, right? Let's just say we're going to use this and it went short because I entered it and it's got a trigger right now. So it instantly went short because the trigger was there. So what happens when you do that? it gives you take profit levels, but it puts the levels on the chart, and then you're able to take those profits accordingly, and it's on-screen programming to change it. And if you make a mistake by you doing it, you just simply click to close, and and then it gives you our little recording, hook and cross strategy. So right now we do have a trigger on the daily because the PAI is starting to turn, it's overbought, but I like to see a little bit more. So sometimes you get a little trigger early, it's a little early. And then other times I personally like to wait for the physical hook, even though there's a trigger and it's not in, then I just click to trade, tell it to sell. So am I trying to say we're going to get a big correction on this Dow right now? No. I think we might get a slight little pullback, but I'm not really looking to make a short position. I think we're going to go higher. And I'm going to paint the Picasso on this daily time frame. I think this daily is going to go and end up slingshotting higher. That's the S&P. I think we're going to go slingshotting higher. Man, Dan and others, if we could get this baby to give us that flush we were talking about, we come back toward that EMA, the daily cycle's down, then I salivate to buy the PAI hook from oversold. But I personally don't think we're going to get a daily cycle down. I think we're going to end up slingshotting higher, right? And that's why my daily should slingshot higher while my weekly is still up. Yep. So that's why I'm still bullish. And I showed you technically several reasons why I'm still bullish, because these pullbacks stopped at the 618, even where this big wick went all the way down, it closed right at the 618 and it's bouncing. So this is why I don't think we're going to go breaking out today or even early tomorrow until after FOMC. Then I think either we get a flush, we salivate to buy, or we start breaking out. But my 21,600 level is the key. And once that closes above there, it's game on to 22.2, 22.4. That's a big move from 21.6 to 22.2, 21.4, 22.4, several hundreds of points. And no question, we're going up here. Like I've been saying, even with the flush, we're going up here. That's why I kind of would love to see another one of these. Flush down here. I dare you. I dare you to flush down here to my EMA. Then I'm going to buy the daylights out of that going back up. Otherwise, I'm more bearish than bullish. I mean, more bullish than bearish at the moment because of the way price is holding that 618 retracement. And we got targets that are already been manifested. From that high to that low, we closed above this 21,760 area. We got it. We're going up here. Got it? So it's typical that we get some sort of retracement along the way. This was an overreaction. That's why I think the markets are responding accordingly. And then we're going to get 2 inside days today and at least through half of the day tomorrow until FOMC. Then we'll probably go breaking out. So I can set, if I wanted to use, for example, the trade management system, we have a different trade management system called the pending order. And you go under here, and we can see under expert advisors, there is a breakout pending order, a pending order, and a bracket pending order. Any one of these will work, but you can set pending orders to say, okay, when the S&P reaches 60 on the NASDAQ, let me go back to that number, the NASDAQ here gets to 21,600, we get above that, then I want to go long and target 22.6, 22.8. So we're talking 1,000 points. When we close above 21.6, we go into 22.6. And I can set that on the trade management system through a pending order, not an instant order, but through a pending order, telling it to buy when the NASDAQ reaches 21,600. It's also available on NinjaTrader. So you can do the same, whether it's stocks or any symbol you have a data feed for. Have to have a data feed, but once you have your data feed all set up in NinjaTrader 8, you can do the same. So Emil, looking at Master, I think they're going to go breaking out. We could get that flush down with Bitcoin, but when Bitcoin starts breaking out, I think this is going to go up. So we can start to say the same thing. Set a pending order. When we start closing above 443, give it a little buffer, maybe 445. We start closing above 445, then I can start targeting 575, 600. And I can set that now through NinjaTrader through a pending order. So there are many ways to use this software other than just, on a daily chart or any chart, just knowing the technical picture. Just like through a broker, when I know a certain product is going to go from 443 to 575, I can tell my broker, okay, I want to buy an option at that point if I want to use options. Or I can wait until I get my trigger and I hear that ding ding, we're at 445, then I can buy that call option out of the money and say, I want to buy a call option. I know they're going to be expensive when you're talking $400 to $500-$600 range. So maybe we buy out of the money call option, give it several months out, give it plenty of time to trade and let it run. But Bitcoin should make its run in the next mid-year to end of the year, October, September. So this thing's going to go popping when Bitcoin goes popping, for example. And it's available on NinjaTrader 8. It's available on MetaTrader 4. And I won't say soon to be coming because the software is there's so many lines of code, thousands of lines of code, and these trade management systems, the indicators, etc., that it's going to take some time, but we will have it on trading view eventually. And I don't mean decades from now, but I mean eventually we are. I'm going to finish up my NinjaTrader, and then there you have it. So any other questions? That we do think this is going higher. And let's go into crypto before we call it a day. Real quick, Bitcoin had a big flush. Was this the flush we needed? The back trend line, we back tested it, it's still holding. So you can actually straighten this out. You kind of play with this thing a little bit. But if you come back toward those candles again, this looks like a beautiful back test. Last time we back tested, we went up to a new high, but that 105 is a thorn in the side. Look at how that 105 has been holding. We spike way above, we can't hold. We spike above, can't hold. Spike above, can't hold, can't hold, can't hold. So I wouldn't be shocked. I'd kind of personally love to see Bitcoin flush down here to the Fibbo line to bounce. But if not, we start breaking that 105 area and we start closing above, not a wick, but a candle body above, then it's game on to start targeting 120, 130, 120, 125. It's going to be a big resistance zone. Then onward and upward we go. I've said this many times. My target, in my humble opinion, we're definitely going to get to 150 to 175. Why that? Because every time Bitcoin halving has come around, this is the fourth time, we've always gone at least to a 1618 retracement. Notice where my 1618 retracement is this year? 175. And always from the crypto winter low, we've done at least a 10x. So from 15,000 and change, 10x is 150,000 and change. And from the prior high to low, we always at least get a 1618 retracement. And this go around in 2025 is 175. So this is why I still say Bitcoin, no question, in my humble opinion, is going to 150, 175. Could even still go higher, but we're going up here. So whenever it hits all of our other potential plays, if you're in IBIT, some of those ETFs, you're in BitU or BitX or any of the other leverage Bitcoin products, you need to be taking profits when Bitcoin gets up here. And pigs get slaughtered when you think, well, it's going to go higher. I'm going to wait and let it go further. I'm getting out. And then I'm going to come back in about 2 years after we get our high sometime later this year and we start drifting down toward 2026, maybe early 27. So we're just barely starting 25. We got maybe most of this year to finish the top and then come into 2026, maybe early 27. I'm going to be looking to buy a lot of these type of trades at these rock bottom prices because everyone knows that's been in this service. When we were down here and I kept saying Bitcoin below 20,000 is a steal. It's a crime to be able to buy Bitcoin at 20,000 or lower. And I went on to say at 25,000, it's such a good deal. It's also, it's not such a crime, but it's a steal. And I see even at 30,000, it was going to be a deal. Look at it at 100. And where are we going? 150, 175. So that's why we want to buy low, sell high. And if you can't handle the heat, then maybe you shouldn't. But this is why you don't even have to buy crypto and wallets. You can buy the ETFs, or you can buy some of those leverage ETFs if you want a little more excitement. That they cut both ways. But man, when Bitcoin goes ripping, that ETF, BITU or BITX is going to go to the moon, right? So we were kind of looking at this the last several days. I personally would love to see Bitcoin flush so we can get these to pull way back, give us a much better opportunity. But we just been kind of testing like Bitcoin's doing, testing in this zone. If we were to get a flush, and you see I have alerts down here, if we were to see this BitU anywhere in the mid 40s or lower, that is salivate country. We may never get there. If Bitcoin goes ripping, this thing is going to be up in the stratosphere sooner than later. But from the recent high to low, we already closed above the 618. So Randy, where's BitU going? Highest of highest probability, we're at least going to 72, 75. 70 plus percent chance we're going to go from 58, or whatever we are right now, 58 to 72, 75. Well, that's the tip of the iceberg. When Bitcoin goes ripping to 150, 175, this thing will probably surpass this target and start shooting for this upper target. So no surprise that this thing could triple. I'd love to see it come down to this area. Then it really sets up a big move, but I may not get it. I do have some bids down here that if it plunges down here and the broker fills it, great. But if not, then I still think we're going up here to these zones. It's 2x leverage. That's what it means by ultra. And then bid X, pretty much the same. This one says 2x leverage, 2x leverage. And it's basically doing almost identical to the other. I'd love to see it flush down toward this mid 40s, mid to upper 40s. That would be ideal. If it doesn't, then my bids don't get filled. But I still think based on the prior move, which from where it came out, we already reached the 1448 from its original inception to the recent dip. We already reached the 1448. So no reason to believe we're not going at least to 120. This one has enough history. This one does. You can see on the chart. It has more history than that BitU. So from the recent high to low, we took out the 618. We had a 75% chance we're going to 70. We already reached it. And Bitcoin is nowhere near where it's going. Imagine that. So where do I think it's going? I think it's clearly going to get to 120s and maybe even higher than that. And we're right around the 40, what is it right now? 40, what is that number? $61 right now? 59, 60, $61. So I still think there's a double available. And if we do get the flush, that's a triple coming back. I like that. So I can't tell you what to do, but this direct leverage off of what Bitcoin does, and when Bitcoin reaches that 150 to 175, which should be in the next 6 to 8, maybe 10 months by the latest. So what if I'm buying options? I don't like options on leverage products. That's a little risky because I'm more conservative, but that's like dousing yourself with gasoline and playing with fire. but some people may like it. Now let's go for broke. Well, it cuts both ways. Leveraged on leverage is really dangerous, but you can make, man, it goes popping, which I know it will. It's just a matter of what if I go leverage on leverage and this baby plummets way down here first? That is going to hurt, right? So be careful. But I do think this is going up to this target is a no-brainer, and then probably going to surpass that because Bitcoin is not at its 150 to 175. And we already went from a low down here of 19 all the way to 70. And Bitcoin made a run, but not its final run. So that's why this 120 and higher is extremely high probability. Last but not least, ETHU for do the same thing on Ethereum. I think Ethereum may need the flush because Ethereum is not looking good. Look at that. Retesting that EMA, not really holding, not really breaking just yet, just kind of sitting there. So if we can get that flush, which technically speaking, all this overlapping, chopping garbage looks like it needs one more flush before Ethereum starts get going. So if we can get a flush down in here, is this a buy at $6? You betcha. I got filled down here, a lot of it at 4 and lower. But if you at $6 is a steal, and I think it's going to go at least to 2023. This is conservative. And if Ethereum can go breaking out to 7,000, starting to move toward 10,000, then this baby's not only going to break this box, it'll probably start pushing 60, 70, 80, which is huge. At $4 going to $60, that's insane. But it hasn't broken out yet. And I'm warning you, if you're going to buy these, nibble a little bit here and there, set some junk bids further down. Because if we do get the flush on Ethereum, this thing's going to flush and I'll just add more to my position. So I do have junk bids down here for even some more lower. And I get to 4 or anything lower. That is a crime to get that low. Again, we got it once, it filled. And if we can get down that 4 or lower again, that's a crime to get it for that low, because even if it's a dud and only goes to 2023 at $4, that's still quite the move, to say the least. And if we get Ethereum to go breaking that 72 onward towards 10,000, this thing's going to go breaking 38 and move toward that 90, which I'm kind of thinking that 70, 80 range up here. We shall see. So again, no buy, sell to hold. I'm not a certified financial planner, but that's what I have. I own it. So disclaimer, I do own some ETHU, and I'm looking to own more, buying it outright as this dips. I hope we get it, and then it goes ripping. If not, I'm already in it, and this thing goes ripping, great. I do have those bids down here at $4 and less to hopefully get some of those filled yet again. But you remember that one right there. It gapped way down, like half price. It was up in the 8 range and gapped down to $4 where it filled that morning at $4.10, I think was the official fill on my broker. So I was very happy to see it gap down to fill at that low, because when we're up at $20 and I got in at 4, that's quite the move. But I think this 38 is very likely, if not a lot more. We just need this guy right here to participate. And this is a coil winding up like silver and gold. And that's 2 we didn't cover. So I said I wasn't going to be long, but here we go. We're going to be long. Gold and silver. Gold's bouncing back nicely off of that pullback. We're definitely going to 28.30, 28.60. We've said that since these closes here. We came back, made higher lows. So this is what I warn you. When you have these targets, Randy, it doesn't mean you go straight up to them. You can get these pullbacks, but as long as your 618s hold, you're good to go and still expecting it. And even from that low to that high, it held and bounced and held and bounced. And sure enough, we're going. We're onward and upwards to 3,000. I said 3,000, we're going to get there. Today, tomorrow, next week, probably not, but we're going that way. And silver has been a huge disappointment. It is totally underperforming. But this is a coil, and typically if you look at silver, during the tail end of every bull run in gold, silver comes on toward that tail end like gangbusters to catch up. So it's coming. Silver is a great deal at these low prices because, as I've showed you numerous times, silver will be, and I got to go out to the weekly chart, silver will be zooming up to 50, 60, 72 on SLV and 55, 60 on regular silver. That's a given. And we already closed. When we get above 35, we touched it, but we didn't close above yet. But when we do, 55, 60, high probability, 73. In order for the SLV, which is about $3 less, 30 versus 27, almost $3 difference. In order for SLV to get to its target, silver is going to have to be up at that 73 and more to reach this upper quadrant, which is extremely high probability. Now, the only question is it going to be a year, 2 years, 3 years? How long is it going to take? I don't know. When's the gold bull run going to come toward an end? That's when silver typically makes a huge run to catch up. But do I think it's going to reach this target up here? Absolutely. I just can't say, is it 25? Is it 26? Is it 27? Your guess is as good as mine. But is this going to come into play? Yeah. We're already closed above the 618. That's why I really love SLV. From the high to the low, we're already closed above that 27,618 over here. So we're already stating the fact that 75% we're going to 60 bucks. 70+% we're going to $72. Now, if you're buying holding silver, just buy and hold because it's going up here. Option wise, you need to go out as far as possible because I don't know. Is it 25? Is it 26? We're pretty good with silver. We said we would get to 35 by year end. We did it last year and then it pulled back. So it's a disappointment. Not really a huge disappointment, but I thought it would just keep going as opposed to a big pullback and waiting all these months again. But it's going to catch up. Mark my words, silver is going to go to the moon, Alice, to the moon sooner than later. And there's your targets on SLV. Now, nothing wrong with buying shares of this and just holding it till we get up here. But it will come. Is it 25? Maybe. Is it 26? More likely 26 than 25. Could be 27. But would I be happy if it got there in 25? I'm going to be happy when it gets there, no matter if it's 25, 26, or 27. Gets up there, I'm going to be happy. All right. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.